we talked about last week that oil's not going back to 60. I don't think it's going back to 70, maybe not 75. I think the new normal probably is somewhere where the 12-month strip is reflecting at around $75 a barrel. Now, there are a lot of scenarios that could play out here because here we are on Monday and nothing happened over the weekend. Trump originally set a deadline to last Friday to blow things up if there was no deal. He extended that deadline by 10 days. And so now it's sort of interesting in that he said that, there's a new regime, new and more reasonable regime in place that we're negotiating with. Well, who is that? We don't know. There's no visibility. And is it really a new regime? Because the whole intent here from the beginning was to have regime change. But with everything that's going on there and missiles still flying and not knowing who's in charge, is this really a, quote, new regime? Or is it just part or a fraction of the old regime that's appearing to be more reasonable? Because remember, the way Iran's negotiated for the last 20 plus years is the stall. Say, yeah, we'll do this. We'll sort of give on this. And in the meantime, hope behind the scenes that we're continuing with their objective of enriching uranium and eventually making a nuclear bomb. So now, is this truly somebody that's going to toe the line and really provide the visibility that they're not enriching uranium, that they're not developing a nuclear weapon? We don't know. And, remember it was over a week ago that Trump said, well, they gave us a really good present. Well, we really don't know yet what that present was. Now, today, apparently, they're going to allow 20 oil cargoes to go through the Strait of Hormuz. We'll see how that goes. But in the meantime, Trump's saying, look, if we don't have a deal soon, we're going in and blowing up everything, basically. We could blow up their oil wells. We could blow up Carg Island. We could blow up their power generation facilities and even maybe their desalination facilities. So if it comes to the point where there's no deal, and I think reaching a deal that's going to be acceptable to the U.S. and its allies is going to be really difficult because there's a very hard red line there. If they go in and blow up their oil wells, that is not easily repaired. That's not easily replaceable. And so then you've got more than 2 million barrels a day of oil that you're not getting back anytime soon. And that just raises the floor on what the oil price is going to be going forward from here. So I think, the best case scenario is this afternoon they come out and say, we've got a deal. There's a new regime. This is who they are. Somehow Iran opens up and says, yeah, we have new leaders. This is who they are. We're totally changing the face of the country and the leadership, and we're going to play ball. We're going to let you fly in, take out all the uranium that we enriched, and it's over here, and you can find it and take it. We're not going to develop a nuclear weapon. We're going to provide clear visibility on anything you want to look at. We're going to let a coalition of Gulf or Middle East countries join together to manage the Strait of Hormuz. And I mean, that's sort of the pie in the sky scenario, the upside scenario. And you say, okay, everything's good. Oil's going to flow. Maybe oil pulls back to $75 a barrel because there's always going to be some now risk premium for the fear that things break down at some point. So I think the best case scenario, and I think this is not likely, but this is really, less than 5% chance that immediately peace breaks out, everybody's happy, oil flows, straits open, everything seems hunky-dory and it's going to stick, and you're at $75 a barrel. Worst case scenario is, and it's probably more likely in the worst case scenario than the absolutely best case scenario, that the talks break down, that no deal is reached, and in the next week to 10 days, the U.S., Israel, and whoever else starts bombing their critical facilities, whether it's, in addition to the power generation, the oil wells, Carg Island, all that sort of stuff. And there's no resolution. There's no easing of oil flow. And the tensions just continue to escalate or percolate there. And things, get out of hand from there. Remember, this is a very ideological regime, extremely ideological regime. And it's going to be very, very hard to get them let go of their objective of, basically wanting to, among many things, go after Israel. And they're not, you have to have a really, really change of mindset from this ideology, which is going to be really tough in a country of over 90 million people. They've got these proxy alliances with the Houthis, Hamas, to get everybody to lay down their weapons and say, okay, yeah, we're going to play along here, I think it's be extremely, extremely difficult.
Right.
So the worst case scenario is we roll along here with oil continuing to be $95 to $100 per barrel plus.
Yeah, and I guess what I'm asking is more like, what is it going to take to get like a scenario? Well, first of all, the price of oil is one thing, but what really people care about is the price of the refined products, right? So jet
Right.
fuel is up 100%. Gasoline is, up in the markets where, in the US, it's not as big a deal, but in some of these other markets, they're starting to have, I saw in France, there's 300 gas stations that have no diesel right now. My podcast co-host Rupert lives in Melbourne. I think they're down to like 15 days of diesel left, so that's what I'm talking about is like, are we facing a cliff where these refined products, because boats take a couple of weeks to get out, and we're going to have this gap of boats that, hits Southeast Asia, that hits Europe, eventually will hit North America too. So jet fuel is like jump the gun, but I'm just saying, like, is it basically like where's the danger point? Is that 2 weeks from now, 3 weeks from now, where we're just going to have like global, like right now it's kind of a crisis, but I mean like a real crisis where there's just like not actually like what you heard about, like you guys know because you're old enough, but I wasn't alive in 73, where like there was no fuel basically.
Right, and that's something. That's what we talked about a couple of weeks ago. That you can have the oil flowing, but if you don't have the refinery capacity to put the oil through to make the product, that's a bigger issue, and that's what's played out. That's been the bigger issue. Part of Saudi's refining capacity was taken out by some bombings that occurred a couple of weeks ago. So you're spot on. That is the critical issue. And where are we? I think, it starts, as far as a crisis, starts to creep in, as you pointed out, beginning in Europe in probably a couple of weeks. And, again, this has to settle down quickly to start to repair or get some of this refining capacity back online, which is not going to happen fast. And we don't have any spare capacity in the U.S. for all practical purposes for refining.
What I've been trying to think through, and I touched on it with Bob last time we were on together. I wrote a piece this weekend called "Boots on the Ground" because I think that's the next step. And if it comes to that, I suspect Iran will pursue a scorched earth strategy. So I've been trying to anticipate. I haven't pulled the trigger, but I've been trying to anticipate. What's the next play, and it's going to be some kind of reconstruction effort. Whether it's in Gaza, whether it's in Iran, whether it's in the Ukraine, I don't know. But so I've been trying to think through, how do you play that reconstruction effort? Fluor, Jacobs Energy, Caterpillar, GE Vernova. There are different ways of playing it depending on whether you're playing, the energy grid or the you can play with Schlumberger, but I don't know, Bob, have you thought through the sort of the ripple effect of boots on the ground type of?
No, and that's the right way of thinking about it. Those are the right names. We've taken a position in Schlumberger. We've been building a position in Baker Hughes, Halliburton, the ones you mentioned, all the construction companies that would take part in the rebuilding of facilities, whether it's the LNG facilities, whether in Qatar, or whether it's drilling wells in Iran, if they do take that scorched earth strategy, and somehow at some point, U.S. is able to get back in there and have a regime that's willing to cooperate and go back and start drilling wells again. But that's pretty far out there. I don't know how and when that might occur, if there were this sort of scorched earth strategy, whether it's on their part or the U.S.'s part, in what Trump's threatened to just blow up their oil wells in Carg Island and everything. That would be, and again, he doesn't want high oil prices, so it's sort of a tricky strategy. And the longer this war goes on, the less support it has. Right now, Spain is not allowing the U.S. to fly their airplanes over the country because they said it's an illegal war. Support on in the U.S. poll wise, with midterms coming up, is sort of waning a little bit here. If this thing continues to drag on, if you put boots on the ground, that's really, opening up, like whether Iraq and Afghanistan, where lives are going to be lost. I mean, you've got it's guerrilla warfare and drones, and you put boots on the ground, you're putting a lot of U.S. and other troops in harm's way. That's really, really difficult if that's the tactic you have to take, if they're not willing to cooperate and open things up themselves, allow the U.S. and Israel to come in and inspect or take out the uranium or do whatever they have to do. And I think that's why it's, despite what Trump continues to say, that he really thinks there's going to be a deal, that they're really far along in negotiations. It's really hard to imagine that, seeing what that is, what that looks like, and that it's really, really regime change in the sense of things are different. It's just hard to imagine what that entails, but we'll see.
Yeah, well, it is one thing that has definitely shown people that energy is the primary money. I think people sometimes take that for granted. And, I have this slide in the presentation I give on macroeconomics to the grad students that shows the arbitrage that 1 barrel of oil is about $200,000 to $500,000 of human work, depending on how much you want to pay them and what you think their output is. But that's a good arbitrage, and we've all been living off that for a while. But just going to 100 starts to squeeze people. All right, Charlie.
And the one thing I want to point out, Ben, we're not buying or selling anything. I'm sticking with the names, especially on the E&P side. I'm not writing covered calls, not selling anything, but not chasing anything. Just sticking with the positions we have here, and sort of watching these. As Charlie pointed out, if there's incremental money to be put to work, it's going to be in the service or construction names. But for the most part, we're just sitting here and holding tight.
Yep. And so let's go, Charlie. What are you feeling about the market right here? We can talk about financials and rates in a second, but how are you feeling, just in general on risk as we go into, it's end of the quarter. So I kind of personally expected, I covered a few things on Friday just because there was no bid. So maybe today it's a little greenish. It's not ripping or anything, maybe tomorrow, but it's been a rough month, and it's a rough end of the quarter.